Most people think Florida's housing problems are all about prices going up or down, but that's not what's really putting pressure on homeowners right now. Behind the scenes, Florida is quietly debating something far more serious: ending property taxes altogether. If that happens, some homes could instantly feel more affordable and values could rise fast. But at the same time, cities could lose one of their biggest sources of funding, putting schools, emergency services, and local infrastructure at risk. Even the governor's office is watching this closely, because once a change like this is made, there's no easy way to undo it. So why is Florida even considering something this drastic, and why now? This isn't just online speculation. Florida lawmakers are actively discussing major changes to the property tax system, including proposals that would sharply reduce or potentially eliminate property taxes on primary residences. Supporters argue that homeowners have reached a breaking point. Insurance premiums are surging, HOA fees are climbing, and monthly housing costs are becoming unmanageable for families who bought just a few years ago. For many households, housing expenses are rising faster than income, leaving little room to absorb another shock. Removing property taxes, supporters say, could provide immediate relief and make homeownership feel affordable again. But critics warn that property taxes fund schools, emergency services, and local governments, and removing that revenue would leave cities scrambling to fill a massive financial gap. And here's the problem: once the system changes, markets react instantly. Buyers react instantly. So what happens to home prices? On paper, eliminating property taxes doesn't make homes cheaper, it makes them easier to afford. And that difference matters. Most buyers don't shop by listing price, they shop by the monthly payment they can handle. In many parts of Florida, property taxes add hundreds of dollars a month to a mortgage, sometimes more in coastal or high-growth counties. If that cost disappears, buyers suddenly qualify for larger loans without earning more money. Housing economists warn that when a major ownership cost is removed, demand responds quickly, especially in supply-constrained markets like Florida. Prices don't stay flat, they move up. Some analysts estimate home values could rise several percentage points simply because affordability math changes overnight, even if wages and fundamentals don't improve. But that effect wouldn't be evenly spread. Entry-level and mid-priced homes would likely see the strongest pressure as more buyers compete for limited inventory. Investors could also re-enter markets they've recently avoided, drawn by lower recurring costs and stronger cash flow. In some areas, that could reignite bidding wars that had only just cooled. On the surface, the market would feel healthier, more showings, more competition, rising prices even if deeper risks remain unresolved beneath the surface. That's where the story turns. Rising home values sound like good news, but they come with a cost. When property taxes disappear, cities still need funding. In Florida, property taxes make up a major share of local budgets, paying for schools, police and fire departments, roads, flood control, and emergency response. If that revenue shrinks, local governments don't get time to slowly adjust. They're forced to react by cutting services, delaying infrastructure repairs, or shifting costs back onto residents through higher sales taxes, utility fees, or special assessments. For homeowners, tax relief can quietly turn into new, unpredictable expenses that arrive from multiple directions at once. Over time, this pressure doesn't hit all neighborhoods equally. Some areas continue to attract investment and development, supported by private money and higher incomes. Others fall behind as public services weaken and maintenance is deferred. That imbalance shows up in the housing market through widening gaps in home values, buyer confidence, and long-term stability. What looks stronger on paper can start to feel fragile in real life, especially for communities already under stress. Not everyone benefits the same way. Higher-value homeowners save the most in absolute dollars. Investors gain leverage as recurring costs fall. But for first-time buyers and working families, affordability doesn't truly improve, it shifts. Prices rise, competition intensifies, and buyers with less flexibility get pushed out faster. Florida doesn't end up with one clear outcome, it ends up with a split market, where opportunity and risk are no longer evenly distributed. And all of this is happening while Florida's housing system is already under strain. Insurance companies are pulling back or raising premiums sharply. HOA fees are climbing year after year. In some areas, homeowners are seeing monthly costs jump by hundreds, sometimes thousands of dollars in a single year. Sales are slowing, listings are sitting longer, and delinquencies are beginning to rise in pockets of the state. That pressure helps explain why lawmakers are even considering such a drastic move. Ending property taxes looks like fast relief in a market that's losing stability. But when multiple housing stresses collide at once, even well-intentioned fixes can make the system more fragile, not more secure. Florida isn't just debating a tax policy, it's facing a turning point. Ending property taxes could bring short-term relief and push prices higher in some areas, or it could quietly weaken the foundation that holds communities together. Once markets adjust, they don't rewind. Buyers adapt, cities adapt, and the consequences become permanent. The effects won't show up all at once, they'll unfold slowly, neighborhood by neighborhood, long after the headlines fade.